Hey everyone, welcome back to ASX Market Watch and charting signals around the entire world. Looking at the world economies from a chartist point of view, a fantastic way to spend a couple of minutes on your weekend just to see where the world is heading from a chartist point of view. Guys, we'll just jump straight into it because you know the charts that we look at them all pretty much. And we're starting with Down Under Australia. A fantastic way to start, guys. Really quickly, over the last couple of, well, let's say over the last 2 years. It's been 2 years, and that is craziness. From the top of the bull market to the bottom of the bear market here. So there we are here, 2007, 2009, the beginning of the new bull run we've got here. The 50% retracement is 5,000, the 5,000 level. Now, what that means, guys, the 5,000 level is the strongest resistance point according to Gann. And that's exactly what's happened. It cannot close above it. What we called a couple of weeks ago was a short-term exit signal, just with this little zigzag pattern down. What has happened since then? The market has continued downwards. Yes, it has. Guys, we've got new support coming in at 4,700. Guys, there's a lot of support around here. As you can see, I'll try and increase the here we go. So we've got like these bars with long tails. 1, 2, 3, 4, 5, 6, 7 now. We've got 7 bars, maybe even 8 with long tails. What that means is that buyers come in around this level and they push the market back up. So what we're looking for is support around 4,700. If that fails, around the 4,600. So obviously markets are emotional. People are emotional, that's why. And so you'll find that the market will find, if it doesn't beforehand, it will find support in between these two levels here, because pretty much that's where people have bought previously and they don't really want to see the market fall any further. They'll be supporting the price at that level. So other than that, guys, that's the All Ordinaries Down Under. Very, very simple stuff. Really quickly, the Dow Jones continues in its uptrend. Now the Dow Jones is holding up better than the other American indexes or indices, but we'll still look at the Dow Jones. Obviously, I mean, what we're looking for is a little zigzag pattern down to be an exit signal there. Haven't quite gotten it yet. It would be a close below 12,505, but also we've got support at 12,400, which is where the previous resistance was. So as you can see, it was resisting there, resisting there. And now, once it's crossed it, it becomes support. So we do have support at the 12,400 level, and also that coincides with the uptrend line, exactly. So that you'll find support at that level as well, guys. We are basically in the target zone for a reversal if one was to want to happen. But again, we just want to wait for confirmation, especially because there is a fair amount of support there at the moment on the Dow Jones index. So basically that's all. It still remains in an uptrend until that time. The FTSE is basically, last week we said for the last 6 months we've had this incredible sideways movement. It's been going between about 300 points on the FTSE, and this is just phenomenal. I mean, it's such a short range for the FTSE to be traveling in, and yet it still remains. It still does travel in it. And guys, if you'll just check this out, we've got long tails here, long tail. Obviously, we've got this little anomaly in March when the Nikkei dropped a lot as well. But then we've got a long tail here, and now the market is starting to fall again. But you'll find the main support will be around 5,800, 5,850 approximately, and that's basically what you're looking for as support. If it closes below that, then the next level of support is not until 5,500, guys. But again, yeah, if we get a little zigzag pattern down and it closes below 5,800, then that would be an exit signal on the FTSE. Until then, it remains in this sideways pattern. And again, you could be writing, I mean, if you're writing options, that would be a great way to sort of do it. You look at the support and resistance on a shorter term basis, and basically, yeah, a lot of people would be writing options below this level or writing options above this level if you were that way inclined. Next, what have we got? Let's check out China, because China's just fantastic. Guys, China, we've absolutely nailed China over the last couple of months. And even longer. We called a short-term entry signal right here. Beautiful stuff. Then we called a short-term exit signal. Let's have a look. Shablam, right up here. Also because we had, and I mean we even called it in advance because we knew that we would have resistance up here. And why did we have that? Because of the medium-term trend line. Called it all the time. Check out the ASX market watches. It's definitely not a hindsight trade. It's awesome stuff. We called it as it was happening, and even before it was happening. How did we do it? It's really just looking at the charts, guys. It's not rocket science, and it's not magic, and it's not any fancy predictions. It's just simply looking at the charts. Really, really basic stuff. Guys, what did we say as well? We said that the market would find support at the trend line, and what's happening? Shablam! It's finding support at the trend line. Oh my goodness, who would have thought it? It's amazing stuff. But apart from that, guys, this is sort of a moment of truth on the Shanghai Composite at the moment. Why is that? Because this little consolidation here at the trend line, it's forming a type of continuation pattern. You might call it a Davis box, you might call it a flag, a pennant. It doesn't really matter what you call it. It's a consolidation period, and what happens is if it breaks to the downside, which would be 2,820, then that would see further falls according to that rule. So that's something to be very, very mindful of, guys. If the support does not hold there, then you could be looking at further falls and potentially the same length again. Well, let's have a quick look. It'd be the same length again from. Oh, I'll see if I can get the right tool here, and we go 1, 2, 3. Yeah, could be looking at 2,650 if we were to see that happen. But again, that's just one method of using predictions there. So that's 100% extension from that move, in other words. Really not rocket science. If you need more information on that, check out the site asxmarketwatch.com. That's where all that information is. Very, very simple stuff and great stuff when you learn it as well. That's the Shanghai Composite in China. And the Hang Seng in Hong Kong, Asia. We're looking at Asia right now. Asia is great stuff. It's fantastic. But what we had, okay, really simple. We crossed the trend line a couple of weeks ago, right here. So not rocket science so far. We did not have, like, the buyers did not support the move. Now what that means is we didn't have a trough that was higher, and then it didn't go through the previous peak right up here. Now, because it didn't do that, the buyers did not support the move, so we did have the potential trend change, but it wasn't supported by the buyers. And so what happened? It fell away. Oh no! That is not good. But apart from that, what did we find? We've got, really simply, a lot of support at this, there we go, at this 22,500 level in Hong Kong. Now, why is that, guys? Again, look at this. Long tail, long tail, long tail, long tail, long tail, long tail, long tail. Like 5 or 6 long tails. By long tail, I mean that the market starts high, goes down throughout the day, and then closes high as well. That indicates that buyers have come in at these levels, guys. So this is not rocket science. It's basically looking at where the buyers and sellers, pure supply and demand. That's all it is. Excellent stuff. Right at the uptrend line as well. But we're back in our little range. So it's about 24,500 to about 22,500. And again, if it breaks out of that range, then we'll probably see further moves in whichever way it breaks out, basically. What have we got next? I think the Nikkei is second last. Guys, really quickly on the Nikkei, we have had a little mini exit pattern here. It's crossed the uptrend line. Guys, what I believe, this is just myself personally, is that the 10,000 level will be a huge psychological level for the Japanese markets. It's a massive round number, and that round number will tend to find huge resistance at this level. Okay, yeah, it's the 61.8% retracement. That's a Fibonacci number, guys. So that's a retracement on the Nikkei, and yes, that's basically where we've found resistance. If it closes above it, then that would give us our short-term entry signal again. Guys, really quickly, what have we got last but not least is the BSE 30, the Bombay Stock Exchange. Fantastic in India, absolutely fantastic. Guys, we called a short-term entry signal way back here. This was a short to medium term entry signal. And however, we did call the resistance at this level, which was the medium term downtrend line, exactly. So we called it all before it happened. That's exactly what did happen. And then we called the support at the longer term trend line as well. Now that's exactly what's happening again. Very similar to China, guys, at the moment. So India and China seem to be very linked at the moment. What that means is we've got consolidations on both markets, and if we break out to the downside, which in India's case on the BSE 30 would be 18,170. If it breaks out below that, and guys, what have we got here? We've got a bit of a long tail to the downside, so the sellers have come back in throughout the day. So what does that signal? It signals more sellers coming in. It signals that we're potentially going to get this move that breaks out to the downside, breaks out from this consolidation, and that would give us further down moves on the BSE 30. So guys, be very mindful. If this support does not hold, then we could see further down moves. So I hope that makes sense. Really, it's not that hard. It's just checking out the charts, looking at pure supply and demand, looking at pure economics on a visual perspective. It's absolute poetry. It's absolute beauty. Guys, get into it. Love it. And until next week, happy trending, and I will see you then. Bye for now.